Happy Wednesday.
Happy Wednesday, Boom. Happy Wednesday, Gail.
Happy Wednesday.
Happy Wednesday, Facebook friends. I might be a little...
I don't know what the hell you have in your coffee. We'll just say that point blank and direct.
You think? Let's go. I'm ready to go. Let's go. We're going to talk about PMI today, but first we're going to talk about 2 new listings I have. How's that sound to you?
Oh, just swell.
Swell.
It's my favorite topic, PMI.
PMI. Oh, I thought hearing me talk was your favorite topic.
Well, that too. It's close second.
Yeah. So I have a new listing. It's going to hit the market today at 407 North State in Ionia. And this is one of those houses that I have driven by my whole life and always wanted to see the inside. I never knew who lived there. And it's just so cute. So cute. 180,000. It's going to be a hot property. It's got a darling yard. And you know, I've been in a lot of houses in the area. And when I
doubt it.
You doubt it.
I doubt it.
When there's one I haven't seen, I'm always excited when I'm going to get that listing.
I highly doubt you've been in a lot of houses.
Oh, you highly doubt. You're a smart ass. But this one I did have you check.
I did check.
And what?
It qualifies for My Home Rewards, which is an independent bank specific program where we pay for your appraisal, your title work, your underwriting, your processing fees. It's usually call it $3,000, $4,000, somewhere in that general area. There's 2 catches. It's got to fall. The house has to fall within designated census tracts.
And this one does.
And that one does. That's step 1. Step 2 is the borrower basically has to make $134,000, I think it's $600 or less.
Oh, do they have to be a first-time home buyer?
No.
Oh,
No.
okay. I thought they did. Well, that's good to know.
Yep.
Yep.
So collectively, the borrowers, you basically have to make less than $135,000.
Okay.
And the house needs to sit in that census tract. And there's, hundreds across the state of Michigan and Indiana that qualify for that.
That's awesome. So we had a closing yesterday where the house qualified.
We did, and we also got her what's called BLIP, which is another $2,500.
She was thrilled.
She was thrilled.
Thrilled.
You know, $5,500, $6,000 off.
That she didn't have to bring of
She
her
didn't have to
own
come
money.
Of her own money.
Yep.
It's a great thing.
That goes back to it matters who you work with. Have you ever heard that before?
I haven't.
Okay,
No,
yeah.
I
think it matters who you work with.
It does. Hearing you say that, it does make sense.
Yeah, smarty. I have another new listing at 209 West Peck Lake Road in Ionia, south of Ionia, so close to the expressway. Great location, beautiful country setting. That's a large, older farmhouse. That one is priced at $260,000. Unfortunately, that one does not hit your...
No,
because that's
it's
not
a little bit outside
in the right census, but still a lot of great programs people could use on that one.
We've got, a $20,000 program for first-time home buyers, and then that $2,500 one.
Yeah.
In addition to everything else.
Yep.
So.
Yep. So those are gonna be 2 hot properties. If you want to see them, let me know. So our topic today is PMI. What the heck is it, and how the heck do I get rid of it?
Yeah. Well, PMI or MI is called mortgage insurance, not to be confused with homeowners insurance, which...
Homeowners insurance protects me, the homeowner.
Let's say a tornado comes through. Just had some just a few counties south of us, last week.
Yep.
Homeowners insurance protects you and the contents of your home.
The structure, the contents.
Yep. Mortgage insurance protects us as the lender. We normally want 20% down. That's ideal. That shows that you've got enough savings, you've got skin in the game to move forward with a financing process or a purchase. It's not required though, 20% down.
Right.
We've kind of dispelled that myth several times. You come in with 0% down, 3% down, 3.5% down, 5% down.
6%, 7, 8.
Yeah, I can count off
Up
the
to
numbers
20.
if you want.
You can go
I was
up to
hitting the
20.
big ones, 0, 3, 3.5, 5. Okay, 20% down payment when you go conventional financing allows you to avoid paying mortgage insurance. Mortgage insurance protects the bank in case of a default from the borrower. we're basically saying we'd like you to have more skin in the game, but we're willing to allow you to make this purchase and go through with the financing process, but we're going to require you to pay for a little bit of insurance every month.
That insures the bank.
That insures the bank in the event of a default, okay? So we're allowing you to move forward without a bigger down payment, but in return, we want some assurances from you, and so that is why we require that. So if you don't have 20% down on a conventional deal, you are going to be required to do that. There's some different things you can pay up front, you can pay over time, whatever. Different programs have different,
and that's not something that the buyer does on their own. That's something that's all lender specific. And it's a seamless process.
Yeah, it's not like anybody brags about, hey, I got a great MI company. We search our providers, and there's like 7 or 8 of them, and we get the best rate based on that client. And it's going to be, when it's conventional, it's going to be based on down payment. The bigger your down payment is, the lower, there's tiers. Mm-hmm. So the higher the tier. So if you're at a 15%, that percentage is probably going to be a lot better than it would be if you were limping in with, say, 5% down payment.
Okay.
And the credit are exactly the same.
Yep.
Your MI per month is going to be lower the higher your down payment is.
Yep. So that's a small premium that's added to your monthly payment.
Yep.
And most buyers get PMI.
Most
buyers.
Yep.
So then
it's also credit driven. So if your score is very weak, that's a sign of risk. If your down payment is weak, that's a sign of risk. So if you have really poor credit, but enough for us to still move forward, and you have a low down payment, your MI is going to be higher than if you had a higher credit score
and the same down payment. Okay, I didn't realize that.
Yep.
Boy, you're just full of information.
It's really fun stuff.
Yeah, it's really interesting. I'm about to fall asleep, for God's sake.
So there are different programs. So like conventional, that's going to be required under 20%. FHA, there's basically an upfront fee that you can finance that in the cost of your loan. It just gets added on, and then you're going to pay monthly payments. Same with USDA; those two kind of go hand in hand. VA, however, you're not going to be paying that monthly amount. You are going to be paying a funding fee, and there's so many different variables. If you're disabled, you can get that funding fee for VA waived. We just had one of my neighbors do that, got that waived. So there's different ways with VA that you can get out of that, but you have to meet the requirements. But it allows you as the buyer to get financing when you otherwise wouldn't.
Okay. So I had PMI. I'm in my house for 4 years. There's a disclosure I signed at closing that tells me how to get rid of it.
Yeah. So I think it's 70.
How do I get rid of it?
Yeah. 78% is typically when that falls off if you stay in the loan for the life. Okay. However, if 4 years later, you want to maybe refi, get a better rate, whatever, cash out, and you got 80%, you can avoid it right there.
So then there wouldn't be any PMI.
Yeah.
So that would be lender-specific talk, right?
Yep.
Okay.
There's also, to add complications to this.
Oh, for God's sakes.
Not complications. More detail and complexity.
Okay.
When we do recasts.
What's a recast?
So let's say you've got someone, we got them pre-approved for a non-contingent offer. They go and buy the new house while keeping their existing.
Okay.
They move into the new house. Okay. So they've got that loan. Let's say it's $200,000 purchase loan.
Okay.
You sell their house and they're sitting on $100,000 of extra money after
Okay.
They can bring that 100 and knock down that month or that principal balance.
Okay.
And we recalculate their payments.
Oh.
We can also do a PMI cancellation if they had it on the front end, assuming they're well in advance of.
Wow, I learn something every day.
So.
Okay.
So the recast that is very common with big pay downs.
So like with all of this, the market being so great, and people have got equity in their homes and
it's
they don't even realize.
It's building
rapidly. Yeah, I mean it's crazy how much equity people have in their homes. But so if I thought I had more than 78% equity, I could talk to my lender and say, hey,
absolutely.
Okay.
You wouldn't talk to your lender, you would talk to me.
Oh, okay, that's right. Okay. But yeah, because you're not my lender, right? Yeah. Yeah, you would talk to Boomer. The only lender you ever talk to is Boomer, 616-902-0796, right?
Yes.
Okay, I think that's great information.
Yeah. So again, 20% is really that round number.
Okay.
But you don't have to have the 20% down
To buy a house.
To buy a
Oh
house.
no, we buy them with 0% down.
We do. So
We do.
To get rid of PMI though, that 20% is I think
Awesome.
where that common myth
Okay.
comes into play.
Okay.
So
So I think this was a good topic for us. And if anybody has a topic they'd like us to talk about, I don't care what it is. It could be about how much Boomer loves his mom, how much Gail loves me. I mean,
I love my mom so much. I didn't even see her on Mother's Day weekend.
Yeah,
the
no,
whole weekend.
I didn't write that one down. Believe me, it's not on my Google Calendar. Nothing.
That was a first.
Did not see my son.
That was a first.
It was the first. Yeah, I still trying to get over it, but we'll see. I think he could do some sucking up and maybe make it up to me. But okay, next week I don't know what we'll talk about, but always open for suggestions. As always,
running out.
You call me. We're never running out. I can talk for hours.
Yes, you can.
Call me, real estate, 616-915-2890.
And Boomer 616-902-0796.
Thanks, guys.